What's going on, everybody? Welcome back to the channel. Glad you showed up for tonight. Daily review. Let's go over what happened, what we did right, what we did wrong. We did a lot wrong today. Um, just a part of trading, just a bad day of trading, not paying attention, not listening to the market, not doing what we're supposed to be doing. Um, Bank holiday, Veterans Day. Thank you to everyone who served. God bless you all. Really appreciate everyone. Um, do me a favor, got to ask right up front. Uh, like the video, subscribe to the channel, and leave a comment below on what you think about the content I'm putting on here. Um, so today, being a bank holiday and not expecting a whole lot of volatility in the market, boy, was I wrong. Um, I set my daily loss limit on my funded account to $125, which only allowed me to take one trade. I figured if I was wrong on that, I just didn't want to risk any more today. I'd wait for tomorrow when it wasn't a holiday. So I did lose my first trade the um, in the funded account. So I was down $125 on that today. In my evals, I still had my $500 daily loss limit, and I ended up um, hitting that daily loss limit as well when we got to the golden pocket pullback of YM. I started a position, was able to add to the position as it was going against me, which I don't typically do, but a golden pocket is one of those exceptions where I will, um, especially on a higher time frame, and got added into that position, which gave me a good stop loss for if I for when I knew I was wrong, right at $500, and we got taken out, as you can imagine with today's price action. So let's just go over the charts real quick and see what we could have done if we had been trading correctly and just not paying attention to the levels and just looking at a bullish market. So this is our 3-minute chart. This is our first 5 minute. These two green lines are our first 5 minute um, opening range. And we fair value gapped through that opening range. Now that should have been an entry right there. Um, Obviously, I didn't take that in um, the live account because I lost. Once we got this strong push up with the fair value gap here, I went long and it was just too fast. I should have waited for the range to break and close above, but with the fair value gap here at a narrow close just below the 5 minute range, I went ahead and jumped in the trade there and took the loss. Again, just not good trading, not good patience. Should have waited for the actual close outside the range, which would have been this fair value gap here, and we could have been off to the races and got our profit for the day in a very short amount of time. But no problem. All right. So midline was retested, and you go up, and we still had a lot of back and forth in this area. Now, when I'm looking for fair value gaps on the 3 minute time frame to trade, these are the kinds of fair value gaps I'm looking for. This shows strength. It's a nice big inner candle. Unlike say like this fair value gap right here. This isn't really what I'm looking for. I mean, the third candle is you know bigger pretty much than the second candle. The first candle pulled back and closed less than 50% of the actual full candle. That right there doesn't show a strong fair value gap to me, right? So I'm looking for strong fair value gaps. Um, so this, um, yeah, this was okay. That became the value area low for today's price action. We had, where did we break it at? Yeah, um, this value area high, um, and we broke through that and just never looked back, right? That was basically the 5 minute range break, breaking through that value area high from previous day. Um, so we come down and we close below the 9 and we bump into what would become today's value area low. And we shoot up and we make another fair value gap to get back above the 9 EMA here. Because that's a fair value gap, getting back above the 9 EMA, which is the ultimate trending EMA as far as I'm concerned. Um, if we're marking out our fair value gaps along the way, we mark it up. The next 3 minute candle comes down into it and closes with a bottom tail bar, another entry uh, model there. Okay, so let's just mark up our chart for entries. Um, on the retest of this one, um, you know, you can get in just as soon as you see that bottom tail wick, um, or you can wait for this candle to close. Personally, I might not get in here, um, but as soon as we have a color change, and I know these are down candles just from market structure. Um, so as soon as we get past these bodies right here, that's when I'm entering the trade uh, on the retest of that fair value gap. Now, truthfully, um, I'm going to enter on the close of this candle that creates the fair value gap. And because my risk here is going to be enough to cover the fair value gap. Just barely, but I don't expect this fair value gap to be completely rebalanced before going higher. So this would be my entry. You can wait for the retest of the fair value gap and then again enter at the top of these candles. It's going to be the same entry. Now I don't know that when I enter the candle there, but it ends up pretty much being the same entry. Now, if you were to enter on the close of that bullish engulfing candle right there, that's a little too late because you're going to get stopped out, okay, by a tick, and then you're going to see price head in your direction. That candle is just a little too big to carry the full weight. Um, you know, so I always recommend get in on the color change. If you're waiting for the retest, get in as soon as you cross the bodies of, you know, the previous high that dipped into uh, the fair value gap, and that should give you enough cover on your stop loss to cover what you need, right? So let me make sure. Yep, that's our stop loss. And our stop loss is down here. We didn't cover the fair value gap, but we covered about 75% of that fair value gap. And if that's going to be a breakout gap, then the midline of that gap should hold, okay? And we really, really shouldn't go much further than that. If it does, I'm happy to get stopped out and re-enter the trade if it shows me strength after the fact, right? So I'm just going to mark out the entries at this point because we are going to have a couple of them. Um, so we push up from there. We make a pretty good fair value gap right here. No, that's not the one. That's the one I said I don't like. If we have our charts on normal candles and not stretched out, I can see that again. This just isn't really a fair value gap I like. You can mark it out, but you still wouldn't be entering that trade, right? Um, okay, let me get rid of this little itty bitty one here, which we do make on the way back through, right? So that fair value gap gets inverted. Now, as soon as you have the fake flip of this inverted fair value gap, you could jump in right there. Okay. Um, so that is a trade entry. But again, let's just focus on fair value gaps that get retested for entries. Okay. Um, so we make a fair value gap here. That is a nice one, a nice strong center bar, nice strong sidebars. It never gets retested. You would have to make your decision on where you want to enter this trade at after getting uh, after getting this fair value gap. You know, maybe in this consolidation, then you get the color change here. Maybe that's a good place to enter. You do make another fair value gap here, which also does not get tapped back into. Um, Now, this is the 3 minute chart, okay? So I'm going to show you a few different options here because this does tend to happen a bit on the 3 minute chart, okay? You're typically going to, miss a lot of the fair value gaps because they don't come back into balance, right? So let's go to the 2 minute chart, maybe, maybe not. 5 minute chart. Well, this is a wonderful time for TradingView to slow down on me. Wow, really? Okay, so let's go down to the 2 minute chart. And there you can see we made the same fair value gap, had the same pullback, went up. Now this fair value gap looks a little stronger, okay, until, you know, we pull it down a little bit, but it does look a little stronger. It had a bigger middle bar on the 2 minute chart, um, but still fails. Then we come up and we grab this one and did it, you know, barely got retested. Okay, but it did get retested because these drawings aren't going to be accurate. You'd have to adjust them a little bit. Um, oh, hey, where'd you go? Come back here. Just based on, the new candles. Boom, there you go. It's a tap and go. Uh, get in on the color change about this candle. Long right there. Well, on this candle. Boom, get in right there with your YM template. Plenty of stop loss. You're on your way. Fair value gap here. Nice strong fair value gap there. That's definitely a fair value gap I like. So if we mark this one out, okay, tap into it, enter on the color change right there. So that was a trade entry. And of course, all of these entries would have worked out, right? Uh, on today's price action. So there's no point in going through that. So tap back in, enter on the color change right there. YM template, 50-point stop loss, 100-point target. Um, okay, here's an interesting, and this is why I use the immediate rebalance tool. Anytime you get an immediate rebalance right after creating a fair value gap, it's going to be a pretty strong signal. It's actually a very strong signal, and you should just take the rebalance candle, okay? Because you're probably not coming back into the fair value gap. So we make a fair value gap here. We don't retest, but you can see that we get an immediate rebalance signal. So once this candle is up in this area, when it gets close to the end of the candle, um, in the last 1 minute maybe, or even the last 30 seconds of the candle, you can go ahead and enter the trade. We'll just go ahead and enter the trade uh, at the close of the rebalance candle. If you're that conservative, then this will give you plenty of stop loss, even able to get back into the fair value gap that you were looking at before getting stopped out. Another wonderful uh, fair value gap here. Okay, rebalance comes later, and you bounce for the afternoon up to the 3 o'clock hour. Um, and if you get in on that one, boom, color change right here, just above the 9, 50-point stop loss, 100-point target. I mean, every single one of these trades would have worked out today. So, you know, I screwed up big time by getting in too early, taking my one shot way too early, and missed out on a lot of profit because I would have been able to add to the trade. I could have left runners for the just about the entire move because once this right here recovered, we never got another signal to get out of the trade until we got into this consolidation here, and then we got another trade entry for a second trade of the day. So we had 1, 2, 3, 4, 5 trade entries available to us today. Um, yeah, you know, sometimes you feel like a dumbass. Today I felt like a dumbass. Um, you know, didn't expect that kind of movement on a holiday. Um, but with the markets, you never know what you're going to expect. You got to leave yourself the opportunity to catch trades. And unfortunately, I didn't do that because I lowered my daily loss limit to 125 for today instead of the 375. If I had left my normal daily loss limit, um, losing the first trade would have been okay. I would have caught the second, and I would have made up my profit, made up my loss, and went to full daily profit target on the day. So it is what it is. We all learn from our mistakes, and unfortunately, uh, this is one of those learning days. So not a problem. Um, we just won't do that again, right? Um, so yeah, that is pretty much it. Um, ooh, I don't want to keep you guys too long on the daily review, so I'll cut it here. Uh, keep yourselves in the markets. Um, follow your trade plan and don't doubt yourself. Uh, that is me talking to myself, and hopefully someone else that needs to hear that hears it as well. Until tomorrow, everybody, stay blessed.